For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
All right, welcome back to another podcast and newsletter from the Simple Side. Today, we are talking about guru, insider, and politician trades that happened over the past week, some statistics over the past month and 5 years about them all. Let's get into all the whale opportunities in the market.
Welcome to the Simple Side. Market beating picks inside. There's no jargon and no time to waste.
All right, everybody, as I'm sure you're well aware, this is another new format that I am putting into this weekly send out about gurus, insiders, and politician trades that are going on in the market. I find that it is very important to keep up with everything that the biggest dollars are doing in the market. Whether you find the information valuable for trading or whether you just find it interesting, it is so important to keep track of it all because the biggest dollars in the market are what cause the biggest moves. As always, there's a survey link in the newsletter, which you can find at thesimpleside.substack.com. Go fill that survey out. Let me know what you think of the newsletter and of the podcast, and I will continue to make it better for you all. Thank you all so much for your support. All right, let's jump into quick politician hits. Of course, as you know, I track the 5 most recent politician trades. That gives you access to the freshest information on what politicians are doing in the market, which helps you to go and copy and follow these trades if you find them interesting. The first trade that I have for you this week is Virginia Foxx, a Republican out of North Carolina, who traded Ellington Financial, ticker EFC. She bought the stock, and her position size was between $1,000 and $15,000 at a price of $12.99. The next 4 trades all came from Cleo Fields, a Democrat out of Louisiana. 3 of the trades were for the same stock and all occurred on the same day on June 29th. Those trades were for Apple. These trades all happened between $100,000 and $250,000, and all trades happened at a price of $205.17. Again, that's on Apple, ticker AAPL. The last trade of the top 5 and the last trade that Cleo Fields made was on Amazon, ticker AMZN. He bought the company on June 29th for between $100,000 and $250,000 at a price of $219.39. Now, if these 5 trades are any indication of the entire political sentiment, I would have to say it is on an extremely bullish market trajectory. But that's not the only place where politicians seem bullish. Before we get into that, I just want to let you know that these 2 traders, Foxx and Fields, were not the only buyers over this past month. They were among 10 politicians that reported trades. Those 10 traders made 65 trades between them, and the total volume traded was $6.91 million, which is nothing astounding, but is definitely a sizable chunk of money. And now you're wondering, what stocks were they trading? Well, Apple had 9 trades made by 1 politician, and the stock is up 6.44% over the past month. NVIDIA had 8 trades made by 1 politician. The stock is up 13.82% over the past month. Amazon, 7 trades, 1 politician, up 7.46% over the past month. Google, 2 trades, 1 politician, up 6.73%. JPM, 2 trades, 2 politicians, up 13%. And SNOW, 2 trades, 1 politician, up 5.42% over the past month. If you average that all out, it's almost double-digit returns over the past month if you were following the most traded stocks by politicians. So it's no surprise that they seem bullish on almost all of their trades. And speaking of being bullish, the 5-year average politician buy-sell ratio is 1.03, meaning on average, politicians buy 0.03% more stocks than they sell. The current ratio is 2.19. It's more than double. It's more than double the 5-year average, which shows crazy bullish sentiment from politicians. We'll have to see if this changes after Trump's big, beautiful bill gets signed in. But if it doesn't, I would expect to see this number remain constant or even grow, seeing as politicians are so bullish, even leading up to the signing. Now, politicians aren't the only ones feeling bullish. Insiders are definitely showing signs of bullish behavior, and we'll get into that in just a little bit. But before we do, we're going to discuss what gurus are doing in the market. Gurus, of course, being people like Bill Ackman, Warren Buffett, Jim Simons, Manesh Prabhai, all of those people who have to file 13F filings. Their Q2 filings haven't come out yet, at least most haven't filed them, or I don't think any have filed them so far. When those come out, I will have better updates for you all. But what we're going to look at today are the top bought sectors, the top sold sectors, and the top owned sectors by gurus as of Q1 2025. All right, let's get into the top bought sectors. Topping the list, we have REITs with a total number of net buyers at 29. The number of buyers was 171. The number of sellers was 142. And the total number of holdings in the sector is 499. This was followed closely by oil and gas with 24 net buys, utilities with 20 net buys, manufacturing for apparel and accessories at 20 net buys, and business services at 16 net buys. Our top sold sector was semiconductors with negative 58 net buys or 58 sells. We had a total number of 81 buys and a total number of 139 sells with 364 total holdings in the sector. This was followed by software at negative 47 buys, banks at negative 42, biotech at negative 33, and cyclical retail at negative 26. So what are the top owned sectors for gurus, 13F filers, super investors, whatever you want to call them? Well, the number one sector, which is, of course, the second top sold sector for this past quarter, is software, with 1,051 total holdings in the sector. This is followed by oil and gas, which is 763 holdings, then banks at 749, biotech at 643, and REITs at 499. Oil and gas and REITs both were in the top bought sectors for the past quarter. Banks and biotech, along with software, were all top sold sectors over the last quarter. And I've got one other thing special for you in today's newsletter, in today's podcast. The top options that are currently held by traders. They're held by three different people: Paul Tudor Jones, Stephen Cohen, and Jeffries Group. And the trades that they made in the options market are very, very interesting. Paul Tudor Jones, for example, is betting against the Russell 2000, also known as small cap stocks. It's interesting because he seems to have hedged his bet, trading both put and call options. His put options, he has 35 million shares betting against IWM, also known as the Russell 2000, and he's only got 10 million shares betting for IWM. So he's definitely seeing downside risk in small cap companies. Another big negative bet is Stephen Cohen on Lucid. He's got a put, almost 12 million shares betting against Lucid, ticker LCID. While I don't know the exact date that Stephen Cohen made this trade, it's likely that he capitalized on the 35% decline that Lucid has experienced over the past couple of months, which is just incredible call by Stephen Cohen and his team. Jeffries Group is the last one on our list, and they made two separate bets in the options market. The first, they were betting against IREN. Again, that's Iron Limited, ticker IREN. They bet 10,000 shares against the stock going up in value. And again, it depends on when they bought and whether or not they've sold yet. IREN experienced a 56% decline from their highs in February, but are now from their lows up over 200%. So if they sold at the right time, they capitalized greatly on that trade. If they're still holding, they are getting crushed, but I doubt that's the reality of the situation at hand. The other call that they made was for gold to go up. They had call options on gold, ticker GLD. They had about 7 million shares of these contracts, and my assumption is that these are crushing it. I haven't checked gold stock, but if I pull it up real quick, my assumption is that the stock is just crushing it, and it is. Year to date, it's up 25%. If you go back to sometime in March when they likely traded these contracts, gold is up around 14%. So those call options are likely printing money for them. Great calls all around by all those companies. Again, this is why it's important to pay attention what gurus are doing, especially in the options market, because they seem to win so big when they make bets like that. And while that is all I have for you on Guru or 13F Filer trading, I do have something extremely valuable coming up right here with the Insider Intelligence Report. I'm going to take a look into all of the major trades that happened by insiders over the past week and look at where we can make money on big time moves in the market. We saw a couple of things this week. We saw mega cap executives cashing out at record highs, and we saw biotech insiders doubling down on their beaten down stocks. It's going to be a very interesting thing to look at today. But before we jump into the nitty gritty, let's talk about some of the key themes that we saw over this past week. The first is the great tech cash out that has been happening over the past couple of weeks and months. Silicon Valley's finest are hitting the sell button with religious fever. Jeff Bezos unloaded $737 million in Amazon. NVIDIA insiders are selling into the AI euphoria, and tech executives are treating their stock options like the lottery tickets that they are. We've also seen some biotech bottom feeding. While these tech insiders are selling at record numbers, biotech executives have been buying with both hands. We're going to talk about a couple of purchases. One that's over $100 million, another that's over $43 million. It is going to be very interesting to look at those conviction plays. And last but not least, the Walmart Walton continues to sell. The retail royalty continues their methodical wealth diversification, selling another $37 million over this past week. And their track record of selling, it's really not that great for short-term holders, but their pattern selling may suggest that they're managing wealth, not fleeing a sinking ship. All right, let's jump into the trades that are likely going to matter most for those of you looking for stocks or insiders to follow. These are the past week's 3 best conviction plays. The first is ticker CDTX, where we saw a $100 million director purchase. A director just dropped $100 million on 2.27 million shares at $44 in Sidra Therapeutics. This increased their holdings by 208%, and this is not pocket change, it's a statement. Sidra Therapeutics, ticker again, CDTX, is already up to $48.78 from the $44 buy price. This still provides a great entry point for anybody looking to follow the trades. Now, if you're wondering why this trade matters, I want to let you know that when somebody risks 9 figures on a biotech stock, yes, a biotech stock, there is one of two things going on. They either know something that we don't, or they're supremely confident in the pipeline. Like I said, CDTX is up over 2% since the purchase, suggesting the market likes what it sees. Again, there is a huge risk with anything in the biotech industry. It's very binary. It either works or it does not. You either win or you lose in the biotech industry, but the $100 million suggests the insider has seen some very compelling data. Maybe there's just a biotech buying bug that has jumped and bit every single biotech executive, because our second largest conviction trade from insiders over the past week was Chimera Therapeutics, ticker KYMR. We saw a $43 million purchase happen between 2 different directors. one buying 1.31 million shares and the other adding 317,000. Both purchases happened at $44. Chimera is also up around 2% on the news, but seeing multiples insider buying simultaneously is both rare and powerful, given the amount of money that was poured in from the both of them. The upside on this trade is that Chimera is trading near recent lows, making this a classic buy the dip scenario from an insider's valuation perspective. And the fact that multiple insiders have been buying in the biotech space could mean that something major is coming and going to affect everybody in that space. And these are the people capitalizing on what's about to happen. Our third and final conviction pick that we have for you comes from PVH Corp, ticker PVH, where the CEO bought $1 million worth of stock, which increases holdings by 6.2%. And his trade came directly after an 18% drop in the share price. It's just absolutely incredible. The stock has already recovered to $72, which is about a 10% gain that the CEO has already seen since buying just last week. This is absolutely ridiculous. However, CEOs rarely buy their own stock unless they're very confident about the business trajectory. PVH has been beaten down over the past year. It's down about 30%, although it is still up 59% over the past 5 years. The slow growth over the past year, combined with this insider buy, is likely a catalyst for the stock to go on a wild run. Now, if you're looking to protect your portfolio, you probably should be aware of the top 3 insider sells, the profit-taking parade that has happened over the past week, with Bezos selling $737 million of Amazon stock, the Oracle CEO selling $267 million worth of stock, and the BridgeBio Pharma CEO selling $154 million worth of stock. Go and read more about those by going to the newsletter at thesimpleside.substack.com. I've also got some other things for you, like important buys, aka sleeper picks. These are purchases that might not have been as big as the ones we just discussed, but show very promising trends and could be places to go and profit massively if you make the right moves. Now I'm going to skip down some of the important sells, the warning signals that we saw. We talked about some of those earlier, but we also saw Service Titan, Walmart, and NVIDIA experience a lot of selling over the past week. The one thing I do want to tell you about is the insider intelligence portfolios that we're going to be designing for you every single week when we send these trades out. What we're going to do is we're going to send you portfolios that we think could perform well over a week, a month, 3 months, and a year, if you want to try to capitalize on some of the insider buying that we've seen over that time period. As for today, I'm going to give you the 1 week portfolio in the podcast. From here on out, though, I'd love for you to go and check everything out at thesimpleside.substack.com. In our 1 week portfolio, we're going high risk, high reward by riding momentum waves. We've got 4 long positions: CDTX at a weighting of 20%, KYMR at a weighting of 20%, BTBT at a weighting of 10%, and a contrarian momentum play, SEZL, at a weighting of 10%. We also see 2 short positions that could be profitable. We're going to weight these at 40% with TTAN at a 20% weighting in the short position and Hood at a 20% weighting in the short position. Both are experiencing big selling from insiders and are expected to perform at least poorly in the short term. Again, with this portfolio, we're trying to capitalize on immediate market reactions to insider volatility. We're seeing high volatility expected for this portfolio. Like I said, there's also a 1 month portfolio, which is medium risk, a 3 month portfolio with some balanced risk, and then a 1 year portfolio with low risk and steady growth stocks if you're looking to continue to grow portfolios that way. Go ahead and check all of this out. Again, let me know what you think by clicking on that survey at the very top of the newsletter, and I will be seeing you next week.